Before you scroll past, stop and listen. Tariffs are not just some boring economic term. They're silent weapons in the most powerful wars of our time. When countries clash, it's not always missiles and tanks. Sometimes it's taxes and trade. And right now, the battlefield is hotter than ever. If you think tariffs don't affect you, think again. Every product you buy, every job you hold, every stock you own, tariffs touch them all. This is the game of giants. And right at the center, the United States and China, locked in a high-stakes numbers game that could reshape the global economy. But here's where it gets really interesting. In a stunning shift, China is signaling it's ready to talk, but there's a catch. They want respect. And that's not just a word, it's a loaded message aimed directly at Washington. Today's update isn't just another headline, it's a signal flare in the fog of trade war. Trump tariffs live updates. China signals readiness for talks if U.S. shows respect amid numbers game. This isn't just news. It's strategy, power, and posturing live in real time. We'll break down what this new signal from Beijing really means. Is this the start of a new negotiation round or just a strategic bluff? How is the U.S. likely to respond? And what are the market implications that traders, investors, and policy watchers need to know? By the end of this video, you'll understand why this moment matters more than you think and why the next move could set the tone for the global economy in 2025 and beyond. Stick with me until the end, because if you care about your portfolio, your paycheck, or your power in a changing world, you can't afford to miss this. Before we dive in, kindly take a second to hit the like button. It really helps to support and to grow my channel and keeps us bringing you the latest market insights. Thank you. Let's break this down because this isn't just about politics. It's about money, markets, and massive momentum shifts that investors like you need to pay attention to. We're in the middle of a trade chess game between the world's two largest economies, the United States and China. And every move, every word, every tariff, it all shakes the global market like an earthquake. Today we got something big. China just hinted that they're open to returning to the negotiating table, but only if the U.S. shows them a certain level of respect. Now, what does that even mean? It means China isn't backing down, but they're also not slamming the door shut. It's a power play, but it's also a potential opportunity for de-escalation. And if you're an investor, that should make your ears perk up. Why? Because when tensions ease, markets rise. When the threat of tariffs fades, business confidence surges. And when superpowers talk instead of threaten, investors win. Right now, the markets are watching this like hawks. They're looking for signs of relief, of progress, of clarity. And this latest signal from Beijing? It's a potential green light. If the U.S. responds positively, maybe by softening its stance or showing a willingness to negotiate, this could spark a rally across multiple sectors. Tech stocks could rebound. Export-heavy companies may see a boost. Commodities and industrials could spike. Even emerging markets might catch some upside momentum. But here's the kicker. This isn't just about what's happening today. It's about positioning yourself for what's coming next. Investors who understand the flow of geopolitical energy and react before the herd are the ones who win in the long run. We're not just watching headlines, we're watching signals. And this one is flashing. Watch closely, make your move. So what should smart investors do right now? Stay informed. Watch how the U.S. responds in the coming days. Consider positioning in sectors tied to trade, logistics, and global demand. And most importantly, don't panic. Strategize. Because whether you trade stocks, hold long-term positions, or manage a portfolio, you need to understand that trade talks are not just political, they're deeply financial. This isn't noise, it's market-moving power plays, and you want to be ahead of them. And just when it seemed like the fog of trade tension might drag on indefinitely, we get a beacon. In a Tuesday interview, U.S. Treasury Secretary Scott Bessent dropped a key insight that every investor should be paying attention to. He said, and I quote, "He's optimistic about clarity on tariffs and progress on key trade deals over the next 90 days. Let that sink in. We're not talking vague promises. We're talking about clarity and a 90-day window to major progress. Even more interesting, Bessent made it clear. While China is the headline, the U.S. isn't just focused on one player. Let's set aside China, he said. There are 15 large trading partners, and we're in rapid motion. Rapid motion. Those are not words you throw around lightly in global trade policy. This means the U.S. is gearing up to finalize or advance deals with 14 of its biggest partners, possibly resetting the trade landscape entirely. So what does this mean for you, the investor? Tariff clarity reduces uncertainty, and markets love certainty. New trade deals often open new markets, boost exports, and lift GDP outlooks. Investors positioned in globally exposed sectors like industrials, tech, logistics, and even agriculture stand to benefit first and most. This is the kind of macro tailwind that quietly lifts portfolios before the mainstream even catches on. If Besant's 90-day optimism proves true, we're looking at a potential policy-driven rally, where sectors punished by trade war fears could snap back hard. And when China does return to the table, under increased U.S. pressure and a broader global trade recalibration, it won't be a whisper. It'll be a roar. And smart investors? They'll already be in position. If you're enjoying and finding this helpful, please take a moment to like this video and share it with your friends. Your support helps my channel grow and allows me to bring you even more valuable news. Now let's talk timing, because timing is everything in investing. As tensions between the U.S. and China hit a boiling point, President Trump just hit pause on his most aggressive move yet, a sweeping round of so-called Liberation Day tariffs. For the next 90 days, those steep duties are frozen. Why? Because this is a deliberate strategy to give negotiators the runway they need to hammer out new deals. But don't get it twisted. This isn't about easing up. It's about tightening the screws, smartly. Because while the U.S. steps back slightly to open the door, China just fired back hard. They've raised duties on U.S. goods from 84% to 125%. That's not posturing, that's escalation. In response, U.S. tariffs on Chinese imports have surged to a multi-layered assault. 125% reciprocal tariff, a 20% levy tied to the fentanyl crisis, and targeted Section 301 tariffs ranging from 7.5% to 100% on specific categories. This is a high-stakes, high-pressure game of economic brinkmanship. And yet, markets are responding with surprising resilience. Why? Because underneath the noise, there's one word that markets care about most: relief. Investors are watching closely for delays, carve-outs, and strategic exemptions. President Trump has already signaled flexibility, hinting at a delay in auto tariffs and suspending some levies on consumer tech. That's huge for companies in manufacturing, logistics, and electronics. Let me put it in plain terms. The worst-case scenario isn't here yet. And with that risk temporarily off the table, investors are breathing easier and buying smarter. So here's what you need to watch next. Who's exempt? Countries and companies getting a temporary pass could see a rally. Where's the delay? Sectors with postponed tariffs may enjoy a short-term surge. What's next from China? Any sign of real engagement or even softening could ignite a broader risk-on rally. Bottom line, this 90-day pause isn't just about politics, it's a window of opportunity. A window where market sentiment could shift, where suppressed sectors might rebound, and where positioning early could be the smartest move you make all quarter. Late Monday, the Trump administration quietly took a bold step forward, moving toward tariffs on semiconductor and pharmaceutical imports. That's right, chips and meds, two of the most critical industries in the modern global economy. The Commerce Department has launched an investigation, a move widely seen as the on-ramp to full-blown tariffs. And that sends a very clear message to the world: no sector is untouchable. Let's break it down. Semiconductors are the beating heart of everything from smartphones to satellites. Tariffs here could mean supply chain shifts, price increases, and a scramble for domestic sourcing. Pharmaceuticals? Same story. The U.S. imports many key ingredients and finished products. This could hit generics, biotech, and even healthcare access. And yet investors aren't panicking. Why? Because smart money sees something else: opportunity in reshoring, new supply chains, and domestic innovation. U.S.-based chipmakers, pharma giants with local production, and infrastructure suppliers could be the next to surge. But the ripple effects don't stop at high-tech and healthcare. Even the housing market is catching stray fire. According to the latest NAHB Wells Fargo Housing Market Index, builder sentiment rose to 40, up from 39 in March, slightly beating economists' expectations. Now let's keep it real. A reading under 50 still means more builders see conditions as poor than good. But the fact that it rose at all, in the middle of tariff chaos, is telling. So what's going on? Builders are walking a tightrope. On one side, they're facing rising material costs due to tariffs. 60% say suppliers have already raised or plan to raise prices. That's a serious headwind. On the other side, demand hasn't vanished. Interest rates are stabilizing. Buyers are still circling. And that glimmer of optimism? It might be the market misreading how resilient this sector actually is. NAHB's chief economist, Robert Dietz, put it plainly. Policy uncertainty is having a negative impact on home builders, making it difficult to price homes and make critical decisions. So let's bring it home. In the middle of headline chaos, tariffs, trade battles, builder jitters, and policy pressure, we're also seeing strategic patience, market resilience, and signals of opportunity that most people are missing. We've got a 90-day window that could reshape global trade dynamics, unlock clarity for investors, and reignite momentum across key sectors from tech and semiconductors to housing and logistics. The data isn't all doom and gloom. Builders are holding their ground. Negotiators are talking. Smart money is circling. And if you're paying attention, not just to the noise, but to the signals, this could be one of those moments that sets the stage for your next big win. So ask yourself, are you reacting like the crowd? Or positioning like a pro? Because the market doesn't wait for certainty. It rewards those who move before the headlines turn bullish. If you got value from this breakdown, do me a solid, smash that like button, share this video with someone who needs a clearer view of what's really happening out there, and of course subscribe for more deep dive insights on the moves that matter most to your portfolio. Drop a comment below. What's your move in this market? Are you watching semis, housing, or something else entirely? Stay sharp, stay early, and stay bullish. I'm out for now, but we're just getting started. Thank you for watching.